Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment to Traders review. Today we're going to have a look at the 41st report of this year. Before I start the review, a reminder, we've got two new services out, futurestradingguides.com focusing on futures markets, and fxtradingguides.com, of course, focusing attention on forex markets, but also cryptocurrencies too. So back to the review, starting off with the Nasdaq, which is on top of our list right now. We have a 34% change in commercials positions, 36 in large speculators. Unquestionably largest changes in the past 52 weeks. Of course, this is a bullish COT change signal, suggesting there could be an increase in prices over here. Jumping to the 5-year chart, you may see that, interestingly, we are still closer to the bullish extreme levels. Of course, I've explained a couple of times in the past that since COT data is not a traditional technical indicator, meaning it is not derived from price, we always have to analyze the specific characteristics of each and every market. So I would definitely suggest anyone interested in the Nasdaq or any other indexes to always look at the other COT reports of other indexes, and then of course due to the correlation of these markets come up to a conclusion or a decision. And of course effectiveness of COT signals can also be a question, as I've explained a couple of times. COT extreme signals are, in my experience, strongest in grains, currencies, softs, and so on, not necessarily in indexes. So that's just a little reminder for you guys. Let's move on and have a look at the sugar market, where we have a 24% change in commercials. In this case, this is a bearish COT change signal coming after this nice rally that we had in the market. So this is, of course, suggesting there could be a bit of a pullback early next week. Now let's look at the 5-year chart and we'll understand why we had this nice rally. Well, it's quite obvious. We have this beautiful bullish extreme in the market that ignited this rally. This is still there. Traders have not changed their positions dramatically yet. Of course, time is a huge factor over there. So we're still closer to the bullish extreme, suggesting this may be a trend changer. We could see higher prices coming in the next couple of weeks or month, or possibly even years, of course. Moving on to the S&P 500, we have all-time signals there, but let's start off with the COT change that we have. It's a 17% change, not as large as in the Nasdaq, as you can see, and it is bearish compared to the Nasdaq, where we had a bullish COT change signal. Jumping to the 5-year chart, you may see that we are at an extreme, and both in commercials and large speculators. Of course, this supports further declining prices in the S&P 500. Moving on to large speculators, COT Extreme, we're going to skip the S&P 500. We just talked about that, so let's continue with the New Zealand dollar. And jumping to the 5-year chart, you can see this extreme on this wider time frame. So this is a bullish COT extreme. We had that in the New Zealand dollar already, so it's not surprising. It's just simply increased to even greater levels. This suggests that the New Zealand dollar will break this bearish trend and continue upwards. Of course, we may need to wait for that. A few more weeks possibly. Nevertheless, stress levels have reached an all-time high, no question about that. So good opportunity here if anybody is considering one. Moving on to the gold market with the 911 report extreme. This is the third on our list right now. There you go. The 5-year chart is very visibly showing to you how extreme traders are at the moment. So commercials are at all-time high, meaning their positions have never been net long to that extent, or I'm sorry, I have to come back a little bit. So they haven't been so net long for 910 reports. That's a pretty long time. And large speculators haven't been at such levels for 911 reports. So it can be considered as an all-time signal. And of course, you can see that this is a bullish COT Extreme signal, and we can see that this week there has been a nice upward movement in the price of gold, and there's a nice chance that this would continue to follow through. Australian dollar is our next market, the last one for this review. Jumping to the 5-year chart, let's have a look at this 186 report extreme in commercials and large speculators. The same is the case in both trader category. So it is, of course, a bullish COT Extreme. Of course, we're not surprised after seeing the extreme in the New Zealand dollar. Again, we're talking about significantly correlating currencies. So the same can be applied here. We are expecting the Australian dollar to gain some strength in the next couple of weeks or month ahead of us. So that was all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.